Thanks for joining. So a bit of an overview. We'll go through, we'll introduce you to our team about Beyond the Bank and why a private lender is a good idea to add to your toolkit. We'll also talk about why we think PMA is the one that you should add to your toolkit. We'll talk a bit about private lending products, our lending process. Importantly, how brokers can earn an extra $60,000 a year just referring to PMA each year. And we go through some of the case studies that we've seen over the last year or so, just showing what sort of out of the box lending that we do. So firstly, just introducing the team. So my name's Peter Cuskelly. I'm Managing Director at Private Mortgages Australia. Today we've got two of our relationship managers. Deshaun, unfortunately, is not feeling well, but we've got Brendan Barry Murphy. You can give us a wave, Brendan, and Larry Sharon, who are both BDMs with our team. So we have bolstered our team quite a bit over the last year. So we now have 3 BDMs servicing our broker network. So if you don't know these guys, feel free to reach out. If you like golf, Brendan and Larry are more than up for a game of golf anytime that you feel up to it. All right, so Beyond the Bank. So these are some of the reasons or some of the differences that private lending or PMA particularly does differently to your normal bank commercial lending. So we have no strict serviceability requirements. So there is no financial assessment. So that is just how they're going to repay the loan. Flexible. It's really based on requirements and really what everybody needs. So for PMA, specialised projects are really what we do every day. No scenario is the same. So we look at a lot of different things that not every private lender will look at. So we will look at things like regional companies or securities. So we will go outside just your normal everyday house. We'll look at farms, looking at a winery at the moment. We do equipment finance. Now, when we say we do equipment finance, the purpose of the loan is equipment finance. The actual security is still mortgage security. I'll give an example of that a little bit later. We do construction and subdivision funding. We also look at debt consolidation refinance. That's a major part of the scenarios that we look at, particularly now with ATO being quite aggressive and also not tax deductible. We do property purchases, particularly if it's a company name or commercial property. And I suppose the bottom point there is tailored and flexible. So if you've got a scenario that doesn't fit either a bank or some of the other private lenders, please jump on the phone and chat to us. We are, I use the word bespoke, but we do tailor every deal to meet the client's requirements. So we really do look at each deal individually. And as we said, there's no serviceability. So if it makes sense, generally we will come to the party and get it done. So why PMAs? We have a streamlined application process. So a quick app form takes only 10 minutes to complete online. And you will get a response within 4 hours. Now, whether it's a phone call or we go straight to indicative letter offer, Depends on how it sits. So we do our initial assessment quite quickly. We do true no-doc loans, so we don't have any serviceability requirements. We don't require any proof of income, and in most cases, we don't need an accountant's letter. Or in all cases, we don't need an accountant to certify income, so there's really no income there at all. We look at all property types and locations. So whether it's I don't know, what have we got at the moment? Hotel, winery. We also do houses in major metro areas, but we will look at very much anything, and we'll adjust our LVR accordingly. So we look at the risk of those properties. And as I said, each loan is individually assessed by our team. So as soon as you submit a quick app, we'll have a quick look at it and let you know if we can help. So PMA, sort of reiterate this a bit, we focus on the exit strategy. So it's really about finding out how the customer wants to repay the loan. Now, whether it's refinance to a major bank after clearing ATO debt, or whether it's sale of an asset or something else, we will structure the loan to meet those requirements. We have an extensive product range. Now, as I said, whether you need working capital, equipment purchase, ATO, or just a general equity release for whatever purpose, we can accommodate all those things. We do what a lot of the others don't. So if it's a partly constructed house or project, a complicated company structure, as long as we can make sense of, or as long as the loan makes sense and we can follow it through, and we get all the information up front, it's something we can usually put together. Like most lenders, we don't sort of like surprises, but if you tell us everything up front, sort of what's and all, for want of a better phrase, we can usually work out some way to go forward. We have funds ready to lend. So PMA operates its own mortgage fund. We have our own credit committee. So I sit on the credit committee. So we make our own lending decisions, and yeah, we talk about deals every couple of days. So there's shouldn't be any surprises with those decisions. And we're also growing. So we've doubled our size every couple of years, and something we want to continue to do. So we are looking to expand and take on more brokers and loans. So yeah, give us a shot. So what PMA offers? These are some of the solutions that we offer. We divide them into business solutions or property solutions. So bridging or working capital is I suppose, just a normal cash out type process. Business purchase or equipment, a lot of banks or more established institutions won't lend to a startup business, so that's something we'll do. Business equipment purchase, as I said, that's something I'll talk about a little bit later, but secured by mortgage, we can help businesses purchase equipment. We do equity release for first and second mortgages. So second mortgage is often quite an easy or a practical solution, just sitting behind a home loan or a major bank. Doesn't unsettle anything and is quite good for a short-term requirement. We do refinance and debt consolidation. As I said, we've seen a fair bit of that around the next topic as well, ATO debt, but there's also some people have had unsecured loans that they want to try and consolidate. Often, given we're a secured lender, these are often at a lot cheaper rate. For property solutions, we have land and property finance, land subdivisions. We do a bit of renovation and flip finance, development construction. We are back into doing that as well. and residual stock is something that we've had a few inquiries of late as well. So just in terms of our lending process, we all starts with submitting an online quick app, or perhaps there's a chat with the relationship manager first. But submitting the quick app's really where we start to crunch the numbers and work out if we can do the loan or not. So we look at doing our initial assessment. Like I said, we get back to you within 4 hours, let you know if it does meet what we can or our requirements. If it does, we can do an indicative letter of offer, which has the rate, assessment fee, and pretty much all the disbursements set out in there. So with the indicative offer, there is no charging clause. We do ask that when you accept the indicative offer, that there's an $1,100 assessment fee that we charge for doing our due diligence. So if the terms are acceptable to the client, sign the indicative letter of offer, pay the assessment fee, and then we start our due diligence. Now, this is where we start doing credit checks, valuations, etc. So doing a bit of a deep dive into the deal itself. Once it gets approved, we'll then do the letter of offer, and then if that's accepted, then we go to documentation and settlements, so sending those out by solicitors. So yeah, that's our process. We have done it all within 5 business days for a very supportive and well prepared borrower. Generally, valuations these days mean that we'll be taking sort of probably a little bit more. Valuations are taking between 1 and 2 weeks at the moment. So just reiterating what we've gone through there. So the PMA way, we have the online application guaranteed response time of 4 hours, low upfront fees. Our legal and valuation fees we do at cost. There's no in-house things, so in-house legal evaluation. So whatever we get charged, we pass that on. We can do up to 75% LVR on a first mortgage for a metro residential property. Regional securities and other property types, we adjust the LVR down. We have generous channel agnostic approval fees. So what that means is that if a customer comes to us, we charge the same approval fee as if they came via the broker, where we're paying out a little bit of our approval fee as a commission back to the broker. So it doesn't matter whether the customer comes directly or not, they'll be paying the same approval fee. One thing that I will say at that point too is if you refer a customer to us and they come back directly to us, we will still pay the approval fee. So that once you've introduced the customer to us, that customer is yours for life. So we'll continue to pay your commissions out of the approval fees for the subsequent deals. Referral fees paid within 24 hours of settlement with no clawbacks. As I said, we can settle within 5 business days, and we do provide assistance every step of the way to make sure things get done. Just a quick slide on what we won't do. So we're very strict that we won't do deals that are covered by the credit code. So the Consumer Credit Code applies to credit contracts where the money is for personal domestic household purposes or to buy a residential property in personal names. Okay, so we do take a very narrow view of this code, and we'll look at the purpose behind the lending So like it says there, we'll look at the substance of a deal and deciding if we can proceed. Okay. So the next one, how you can earn an extra $60,000 a year with Private Mortgages Australia. So the average SME loan size that we look at is around $1 million. Now we do recommend that brokers, particularly for commercial loans and where there is, I suppose, a complicated loan and you're spending a lot of your time doing it, that you have a mandate with your client. Now with a mandate fee of 1% plus a referral fee of 1% from the PMA approval fee, that can return the broker a $20,000 return on a $1 million loan. So 3 clients per year, it's up to around 60,000 in additional fees that can be earned. So what I'll do now is just jump into a case study. So this one that we did actually got repaid this week, which was great. So it was a refinance of a horse farm and residence that had an existing private loan in there. So the existing loan was in arrears. There was also a caveat from another debt that had been placed on the property. So these guys were in some serious default. They just wanted a bit of time to get the property ready for sale and sell it on their own terms. So it was quite highly geared with the caveat debt there. So what we did, we took some additional security, which was essentially an unencumbered property that they held that actually had a chaff mill on it. So it was an unusual property, but it was just to support that first loan. So I suppose that's one of the things that we can look at, is just taking additional security, whether it's a first or second mortgage, just to get that LVR to an acceptable level. And as I said, these guys got the farm ready for sale, sold it, and it actually settled this week. So great deal. Broker commission on that one. As I said, we paid referral fee because it was up around the 1.5 million. So they got 0.75 from us. They had a service fee on there. So all up, there was 40,000. Now it was split between 2 brokers. But yeah, a great deal for those guys, and a great deal for the client who's sold the property and got what he expected for it. So this is a case study on equipment finance for an earth moving company, or for I suppose a farming support company. So with this one, we had to refinance their existing debt and provide some additional working capital. So what happened? They had borrowed some money from one of the banks on an equipment finance loan. There was a balloon at the end of that, and the bank refused to refinance the balloon. So it was quite a large debt, and because he'd only bought this equipment not all that long ago, it didn't actually show up in the serviceability of his financials at the time. So even though the bank funded it at the start, they wouldn't finance the balloon. So what we did was pay that out against the first mortgage on his property. Quite a low LVR, 32%. And that's giving him enough time to get his financials together, show that he's made the money, and refinance that out. So yeah, it was an interesting deal. Again, sort of banks not using common sense. So it's quite a good deal. Again, commission, sort of smaller deal, $4,000, but yeah, quite a solid deal for us. Another case study with sort of a little bit of a twist that it didn't quite stack up the way that it was presented. So the broker in this one came to us looking for funding to develop a duplex property. They were going to sell it and repay the loan. The problem with this one was that they had bank finance on the development property, which was pretty much up to the full amount that, the full LVR that was available. So it wasn't one, as it was presented, we couldn't help with looking at sort of finance directly against that development property. So what we did, we finished up looking at their SP and talking to the broker and the borrower, and looked at a second mortgage across on one of their other properties. So again, that gave them the funds to complete the development. The broker again made sort of around that 20,000, sorry, that we were talking about, just a little bit over with GST. So again, quite a good deal. It did swap significantly from how it was first presented. So yeah, it was yeah, quite an interesting discussion on that one. And the last case study I talk about today was a purchase for an under market value. So having worked in banks for quite a while, I understand banking requirements that they'll usually use either the lower of purchase price or valuation. Now we will use the valuation price. So this one was purchased under a call option for below market value. So it was purchased quite a while ago. It was a very unusual property. So this one was quite a dilapidated hotel, which I think was what put off a lot of, or the banks wouldn't look at it as a hotel. It was never going to work. It was falling down. But they did have a demolition order or permit for the hotel. So it really was just a land, property development site to look at. So we had it valued as such. The valuation stacked up above what they paid under the call option. So that all stacked up. Again, something a little bit unusual. I probably don't want too many people calling up dilapidated hotels, but I suppose it gives you an example of what we can look at outside the way it's first presented. So again, quite a good deal. Really, I suppose quite straightforward once you look behind what was actually there. So again, a 12-month deal, broker commission was again a little bit under that $1 million, but broker got $8,000 paid the next day. So a good deal for everyone. So as far as that goes, that's the end of our case studies. So what I'll do, I'm probably going to wrap it up a little bit early, but I can ask some questions later. Just to, I suppose, update, we are having a meetup with Melbourne brokers. So I'm based in Melbourne, and our BDM team are also based in Melbourne as well. So, but on Tuesday the 17th, we're having one-on-one meetings with specifically brokers just in Melbourne CBD. So if you would like to catch up, please let me know. We can select a spot in there. But if you'd like to meet up with any of the team, please reach out and get in touch, which brings me to my last slide. So yeah, with that, yeah, if you do want to get in touch with us, there's a 1300 number. You can get in touch via email at info@privatemortgages.com.au. So, or call us on that 1300 number. We do have our BDMs here. So, now, Brendan, I think you've got some tech issues. Larry, you've got that. So, I don't think there are any questions, but if anybody does have any questions, yeah, please drop in the chat and we can have a chat. We can have a look at them. Otherwise, yeah, I'll leave it there. I'm 30 minutes early, but that's okay. So if there are any questions, let us know. Otherwise, I will ask Lauren to finish our webinar and we can leave it there. Right, no questions. That's great. Well, I'll leave that there. If you do want to get in touch, please yell out on those contact details, or you can contact any of the team directly through our mobile numbers or various things in the contact us on our website. Thanks everyone. Thanks for joining in.